G'day and welcome to this week's video. My name's Robert Gowdy and this week we're going to have a look at Ripe. Now if you have enjoyed our videos in the past, it would be great if you could subscribe to the channel, that would be great, and for those that are already subscribed, thank you very much for your support. This week, having a look at Ripe, it's selling cloud products. More importantly, it is selling Microsoft Office 365 and Azure, which is the cloud storage program that Microsoft runs. So it's a substantial part and the bulk of the revenues that Ripe receive. There's a lot to like about this business. We've been I suppose researching and progressively buying it for obviously personally myself, for full disclosure, a shareholder, and for clients over the last probably 14 months. They came out with their annual report, and yeah, probably some good stuff here that's well worth a look at, and this is definitely a business that I would say is highly scalable and fits nice into the realms of reoccurring revenue, which is something that we very much like. So looking at some of the financials here, you can see that gross sales have gone up 28%, net revenue up 36%, and what that is doing is really pushing up the EBITDA there, earnings before interest, tax, depreciation, atomization, and then the after-tax profit is up 103%. So really, fantastic figures. These are the sort of things we're looking for. It's not a big business. We need to remember that it is a small cap. It's not worth more than $400 million, which in share market terms, that is not a big business. But just because it's not a big business doesn't mean that it's not a safe business or a very well ran business. So when we look at some of the metrics, one, profitability definitely helps. We're a big fan of making sure there's a bottom line there, and if there's a bottom line, that means there's cash, hopefully cash left over. So you can see in this scenario here that their cash has gone up by $2.8 million to $25.5 million. These guys have no debt whatsoever. And what they've done over that 12-month time frame, where cash has actually gone up by nearly $3 million, they've also done a $2 million share buyback. So they've actually purchased $2 million worth of their own stock, which is a very positive thing for shareholders. They've also paid out $3 million worth of dividends and $3 million of acquisitions in businesses that are very similar to what it fits in nicely to their offering. So it's adding a lot of value to their current business and more products and options for their customers to buy. And over the same time frame, you can see that they increased their dividends by a full 100% over compared to the 12-month prior. So what Ripe do is they're selling Office 365. There's other cloud-based products that they're selling, but that's the bulk of their business. And you can see here that it's across many different countries and offices that they've got, and you can see where the numbers of employees are working. And just add to that, and this was an announcement they just had a couple of weeks ago, that they just secured the right with a joint venture with a Japanese business to sell Office 365 backed in by Microsoft all the way into Japan. So that opens off a very wealthy, affluent community and a very heavy user of Microsoft. And we need to remember that Microsoft is used by 90% of businesses around the world. So it's a close monopoly, and from a user's point of view, and I'm an end user, we value Office 365 very highly. It provides us a huge amount of efficiencies. We've paid more on software through Microsoft than we ever have, but the efficiencies that it gives us, the programs, the way we communicate within the office is absolutely fantastic. And without looking into Google Docs significantly, it's second to none. And it's really something we've been used to using for our whole lives. Word, Outlook, Excel, PowerPoint, everyone is used to using that. So it's an easy shift into the cloud to use those programs, but then to find all the other gems and programs that Microsoft have built over time as well. So just skipping forward, obviously we're chasing scalable businesses. And what you can see here is 30 June 2018, they had subscribers of 264,000 to Office 365. They call them seats. 1 year later, that has grown to 600,000. Now, a lot of those are academic seats. You can see the difference between the two here. Academic are unpaid seats. Now, I've got no doubt the strategy is there that once people start to use their Office 365 subscription as a student with a deal that's been done with a university, I have no doubt that once they live their life in that environment for $8 a month or $10 a month, there's every chance at that price point they will continue on with that subscription. So yeah, there are some unpaid ones there, but you can see the growth there is 77% of the paid options, and it's growing at 16,000 users per month versus 10,000 the year prior. The bit that excites me is if the end users are anything like myself and my business here, is we love it. We really don't want to move on. We find that it's a fantastic program. It provides us a huge amount of efficiencies and a lot of tools that that are very clever and make us more efficient. So we're prepared to pay for that. So all these subscribers, more than likely, if they're using it properly, won't leave. And it's also worth noting that Azure, which is the cloud storage, off a very small base, but jumped 200% over the 12 months. So from $7 million worth of sales up to 21. So these are all the things we like. We've got a business here that is highly scalable. It has no debt, cash in the bank, has obviously a very good relationship with Microsoft, as they've given them the thumbs up to go into Japan with a joint venture there, of which they own 80% of. So it is very meaningful. This is the type of business that we like. While it's small, I see it to be a very high quality business, selling a product which I see as a monopoly, and one that I know as a user I value highly. Now, this is obviously general information. Our disclaimer is at the end here, so please understand this is not a buy recommendation. The prices ran quite hard from when we first started to look at it to where it is now. So please seek personal financial advice. This is only general general information for you to consider. But as always, as I do with my clients, I encourage you to go and look at these presentations, go and read what the CEOs are saying, get to understand exactly what they're doing. And if you understand business at a high enough level, there's every chance that you're going to have more confidence with that higher understanding to invest more meaningfully, and if things go right, well, that's when the rewards can be fantastic. So thank you for listening. Give us a thumbs up if you like the video. Again, please subscribe, that'll be great. And down to the subscriptions, there's a whole bucket load of educational resources as we continue the education journey to try to teach people about finance and to make good decisions. Thanks for listening. We'll catch you next week.